What's up, Joe? How are you?
Very well, very well. Happy Monday.
Happy Monday. You know what that means?
Podcast day.
Podcast day, then the Lab 2.0.
Exactly. And people can see from our title, it's market update time.
Market update.
And you know what? Last month we had a very interesting market update. I don't know if you recall, we were kind of telling people it's slow, but we're turning around. Right? So we're talking about the whole interest rate and how they announced that they're potentially holding it and all that stuff. Mm-hmm. We now finally have the February stats. So it'll be very interesting to see what actually happened. Mm-hmm. Mm-hmm. But before that though, since this market update, talk to me. How was your month?
Honestly, February was a much busier month than January. Okay. That was to be expected. And I mean, is it the cyclical uptake of spring, or are we recovering from what's been happening in the last year? That remains to be seen. Mm-hmm. But personally, I had an open house in Fairview. Yeah. You know, it's kind of entry level, 2-bedroom, mid 700K. I had 40 groups come in the first day of showing. Mm-hmm. It was like crowd control at that point. Mm-hmm. And then we ended up getting 4 offers. The winning offer came in subject free, and it sold for $807, I believe. Mm-hmm. So it seems like, first-hand experiences, the market has been heating up again. And even our open house just this past weekend out by Metrotown, there was like almost 30 groups that came through, I think.
Yeah, there was. And we didn't underprice the home or anything like that.
No, it was sharp. It was like prices to what comparables around the area, and there were other listings too. So
and I guess from my side of things, kind of splitting into 2 groups is my buyers. For my buyer part, it's difficult, not only because there isn't really a lot of good stuff out there. But what we're also seeing in the last month is that sometimes it doesn't even make it to the open house. Like it'll come on a Tuesday and you're like, oh, you know what? Don't worry. We'll just go check it out on the open house. Thursday, gone. Open house canceled. You're just like, whoa, okay, what happened? On the seller side, we talked about the Burnaby listing that we have, really, really busy. But even with the other listing at Olympic Village, which we consider definitely like a higher end luxury kind of product for condos, sitting at roughly about $2 million. Even that, we're getting quite a bit of activities on it. A lot of people are asking for private showings. I'm pretty sure if I host an open house for that particular home, tons of people is gonna try to come and take a look at it. So yeah, it seems like everything is kind of continuing to what we said on the market update. So obviously we have a lot of numbers that we need to kind of, cover. And as per usual, we'll talk a little bit about what our opinion and what our thoughts are. So without further ado, why don't you get started with sales activity?
Yeah, let's do it. So for the month of February, we had a total of 1,808 sales. Mm-hmm. Now, of course, there's a 47.2% decrease from February of 2022. Mm-hmm. However, it's a 76.9% increase from January of 2023. Mm-hmm. Thank goodness, which is why Joe and I are in such high spirits. Yeah. In terms of price, our benchmark price was sitting at $1,123,400. Mm-hmm. This again is a 9.3% decrease from February of 2022, but a 1.1% increase from January of 2023.
Definitely going to be talking about this after we're done with the numbers.
Hey, 1.1 increase is an increase. We're going to take it.
Any increase, honestly. Mm-hmm. But anyways, we'll talk about a little bit about it. Moving on to inventory. On a monthly basis, for the month of February, we have 3,467 homes that came onto the market. That's a 36.6% decrease compared to last year. And it's actually a 5.2% increase compared to January. Mm-hmm. Good. Total inventory at the end of February, we're sitting at 7,868 total inventory for sale. That is a 16.7% increase compared to last year, and it's also a 5.2% increase compared to last month. Mm-hmm. Mm-hmm.
Now moving on to sales to active ratio, I would love for you guys to pay special attention to these numbers because we are going to revisit them later on in this podcast, and we're going to compare it to January because these are significant. We're sitting at 16.8% for houses, 30.1% for townhouses, and 25.8% for condos. This is very different than it was in January.
Right.
Changing gears into rentals, because of course this applies to the majority of people in Vancouver. Metro Vancouver's rental rate fell by $43 month to month. Mm-hmm. $43, what can you get for that?
2 Big Mac meals?
2 Big Mac meals, or it might cover your Netflix and Apple Music and Amazon Prime subscription.
Or a cell phone bill. There we go.
Or a cell phone bill. And a 1-bedroom condo is now averaging $2,208.
All right, lots to cover. A little bit different from the last several months of our market update.
Yeah.
We see some positive areas. We see some areas that was increasing like forever. Now it seems like it's kind of pulling back a little bit. So lots to talk about. I'll start with, I guess, inventory and sales, since they're so kind of interconnected here. Okay? Sales activities, let's start with that. If you just look at the sales number, 1,808, it seems like it's slow. It's a very slow sales month. However, that is very different from what we just said. Multiple offers, 40 groups.
Yeah, we're not talking out of our ass. Like, these things are actually happening.
Open houses are busy and homes are moving quicker. Right? That is the truth. So what happened? Right? Well, that's really because, I hate to kind of talk about this every single time, is really because we have very little listings. Just to kind of give you some figures in comparison to the last couple of years so you understand. Last year in February, we have 5,471 new listings.
Okay.
The year before that was 5,039 new listings. The year before that was 4,017. And the year before that in 2019, which is also considered a very slow year, we have 3,895.
Okay. So
as a reminder, this year we saw 3,467.
So 5,000, 5,000, 4,800, and now 3,400.
3,400, correct. Okay. So this is what we really mean by there is no inventory to go around. With the lack of new good inventory that's coming onto the market, that's why it seems like seems very busy, even though the sales number doesn't speak like that. Think about it this way. When I was writing this is the analogy that I was using. Imagine if Vancouver is like a pizza shop, okay?
Are we talking about megabytes or like the parlor?
That doesn't matter.
Okay. I'm just trying to get a clear picture in my head, okay?
So imagine that last year we had a lot of ingredients, we had a lot of dough, we have a lot of employees, and we're able to run this pizza shop like crazy. Okay. However, our pizza shop is very famous because we're a Vancouver pizza shop. There is so many buyers for our pizza. In fact, there's more buyers than the amount of pizza that we could actually squeeze out. Okay. Even though we have all the dough, all the ingredients, all the labors and everything like that. Yeah. There were still some people, because there is still more demand than supply, there are some people that's unable to get our pizza. Okay. This year, definitely the line isn't as long in terms of buyers out there. Affordability, what have you, maybe because it's economic downturn, people don't want to be buying pizzas, they'd rather eat at home. The problem though this year is we can't get ingredients and we can't get labor. So the amount of pizza that we're shooting out to these buyers has also significantly reduced. In fact, it probably reduced more than the amount of buyers that's out there wanting to buy our Vancouver pizza shop. Okay.
I'm sorry, you lost me a little bit. I'm like salivating just thinking about pizza. Are we talking about like Hawaiian pizza? Are we talking about meat lovers pizza, pepperoni, vegetarian? Okay, so basically what you're saying is that in prior years, there was a lot more inventory and a lot of demand. Yes. This year, there was very little inventory and less demand, but still it's the very low inventory, which is the number that we are focused on.
That's right, and because you have such low inventory, there are still people that are unable to buy a pizza from Vancouver Pizza Shop.
And that's why people are still fighting. It seems like there's still fights because there's just less of the good stuff to go around.
Exactly. Okay. Hey, you want how much for that Hawaiian pizza? Well, I want it for $1 more. That kind of analogy.
Fair, and that's the 1.1% increase from January to February.
Exactly, and that's why I was saying, I want to emphasize on the want to eat part because it's obviously shown that last month our prices actually went up by 1.1%. Yeah. Now, bring everything back, if our sales activity this month was at 1,808, but our inventory was sitting at 5,300 something new inventory, our prices would not be going up, it would be going down. But the reality is we got 3,400 something in terms of inventory. Prices then went up because we have less inventory to satisfy the people in the market.
We're not making more pizzas with less buyers.
Right.
Sorry, this pizza thing is going to be like stuck with me forever. You must have been starving when you wrote this, probably like 12 a.m.
It was midnight and I was very, very hungry. And Rita's like, you can't be eating right now because you're going to get fat. And then obviously I projected that frustration right into the script writing.
I mean, like me and Nico would be a completely different story. We'd just be eating popcorn and like chips or whatever like that. Sour cream and onion, that's the way to go. Anyways, back to the market update. Yeah. Okay, well, everything that you just shared is very interesting because it is reconfirmed by the sales to active ratio. Now, I know we talked about this earlier when we were going through the numbers to pay special attention to it. Let's take a look at this comparison to January. You can see that in January, it looks like the sales to active ratio was completely swinging the other way, more towards the buyer's market. Whereas in February now, you can see that for townhomes, it went up to as high as 30%. Now, are we moving back to a seller's market again and going into those multiple offer, no subject scenarios? Hold on to your horses, take a deep breath. We have to see some continuity before we go and make that assessment. I just wanted to bring that to your attention because this again correlates with what's been going on with the Bank of Canada and their announcements. In January of 25th, they did say that they would probably hold the interest rates. And it got confirmed March 8th when they did say, yep, we're holding interest rates as they are right now at 4.5%, and that's probably why we've seen this uptake in activity. Because as a buyer, of course, as soon as you hear that, oh, interest rates are maybe going to stay, you're going to start talking to your mortgage specialist and your banks again and being like, hey, what are my options right now? What's the qualifying rate at? Like, how much of a mortgage can I take on? And people are going to get excited again about buying a property. If we shift this again to the rental side of things, well, this is now a second consecutive month where we've seen a drop. Yes, $43 is still a drop. Now, why is there a drop? It could be because, again, with the interest rates. Now, let's paint a picture here for you. Imagine it being 2020 and you're buying, a low interest rate. Now, all of a sudden, Bank of Canada announces that they're going to be raising the interest rates. Of course, that's going to cause some alarm bells to go off in your head where you're like, all right, I better talk to my mortgage specialist and plan it out and see how this is going to affect me. Well, this is how it affected people. Their mortgage payments went up by anywhere from $500 to even $2,000 to $3,000. And for the people that had their payments go up by $2,000 to $3,000, we're not talking about them having like $10 million mortgages with their like West Van mansions. We're talking only about like $1 million to $2 million in mortgages that they're carrying. So of course they're going to be like, well, I'm going to jump into the funnel and you know what, I'm going to be looking for a different product type, and the people that were looking for more entry-level homes, well, they're not even looking anymore and they went into the rental market. Another option could have been because, hey, I sold my house at the peak of the market, I made a good chunk of change, I made $200,000 to $300,000 in the 2-3 years I had the home. I'm just going to chill and rent for a while and wait till the market shifts again before I enter again and buy things at a discount. Who doesn't want to buy low and sell high? Everybody, right?
Exactly.
We'll see what happens. Will rentals continue to trend downwards? I mean, we'll have to keep an eye on the interest rates. If they remain steady or start dropping in the next 12 months, we may see that rentals will come down.
And just to add on to what you said is also there is just this very basic psychological concept of fear of the unknown. Let's go back in time a little bit. During that interest rate hike that we were experiencing, a lot of people don't know when that was going to stop. The government didn't announce when that was going to stop. So a lot of people was like, okay, I don't want to do this right now because what happens if we go back to the 80s and our interest rate ended up being in 20%? Then me buying this home right now, it's like catching a falling knife. So I'd rather go rent.
And fear sells news. So of course they're not going to announce anything. They don't know what's going to happen in the future. Everyone in their heads, they're like, oh my God, this is going to be the worst economic crisis we've had in the last 200 years.
Every economic crisis is the worst. The worst.
Exactly.
They said exactly the same for 2008, and we came through it. Not perfectly fine, but we came through it. Right? But anyways, coming back to it is that fear of unknown. Now that obviously, after the Bank of Canada says, hey, I think we're done, then it gives a lot of renters this boost of confidence. Okay, do I want to return back into the ownership market instead of the renting market? Thank you for that. And I guess now that we kind of know what's happening on the market as of right now, I want to just kind of look forward a little bit. As per, if you if you're living under a rock, but you probably know by now that our market is so significantly tied with interest rates, right? So obviously, it's great news that the Bank of Canada, it says, hey, this is it. We're not going to be raising interest rate unless something else dramatically happens. If they can hold that promise, then I can feel like we're going to have a relatively active market for the rest of the year. Now, my only biggest concern, it's not about the Bank of Canada, it's about our neighbor to the south, our bigger brother, the United States. Because their story at the Fed down there is completely different. Jerome Powell, the head of the Fed, has already stated that he is going to continue to raise rates. In fact, I think they're going to raise rates very, very soon. Because their inflation number is not as under control as our inflation number here in Canada. Right? And a lot of people will be like, what does the US have to do with our rates? Well, unfortunately, we're Canada. So whether or not you like it or not, we are attached to the United States in many, many, many factors. This is something interesting that I learned the other day I was listening to podcasts. Every single province in Canada does more businesses with their counterpart to the United States than they do with each other.
What happened to nationalism?
There is non-nationalism. There's this thing that I was hearing is like Canada is not a country. It's actually just 10 provinces that deals with their own things separately, right? So with that being said, it's like, well, if the US continue to raise interest rate, we cannot have our rate sitting where it is.
It'll hurt us.
It will hurt us because as US increase their interest rate, their bond starts to look better, their term deposit starts to look better, and what happens is that a lot of people then will flush their money into American dollars. And that means that their dollar is going to appreciate in comparison to Canadian dollar. And now we cannot at any opportunity to have huge discrepancies between the Canadian dollars to the American dollar because it will really harm our economy in a different kind of way.
Yes.
So if the Fed continue to increase interest rate, the Bank of Canada might be forced to also increase interest rate as well, just so that they can also protect kind of where the Canadian currency is sitting at. And honestly speaking, I was traveling in the last little bit, and I can tell you the Canadian dollar is not fun right now when you go travel because it's not worth a lot.
No.
Now imagine if it is even worth even less.
I mean, it'll be great for tourism for people who are coming to Canada.
Right.
Yeah, so that'll stimulate the economy that way.
But it's going to have other issues altogether. So that's kind of where my concern is whether or not, long story short, can the Bank of Canada hold its promises? Nothing political, but more like, we have someone more powerful that is kind of, controlling us as well. Right? But with that being said, for the time being, the mortgage rate interest rate seems like it's relatively stable, and the buyers are coming back onto the market.
Yeah, I mean, right now in the last week, I've talked to 3 different buyers. 2 of them were waiting for their PR.
Yeah.
One's like, hey, I'm 4 months out. The other one's like, hey, I'm 6 months out. And I even just recently talked to someone today from Ukraine, and they're right now residing in Turkey because of the conflict. They're like, hey, Jeff, I really want to get into the market here. Like, what can I do? Well, with Mr. Trudeau's new legislation, there's obviously restrictions, and they have to buy in like areas that are less than 100,000 people, but people are still coming to Canada. And I know we don't want to talk about this all the time about like the immigration, but these things are happening.
It's true.
Whether we like it or not.
Yeah, and like you said, we haven't even touched on that part of things yet. You can imagine with that part added into the equation, things just gets a little bit even crazier. And that kind of covers the demand side of things. And then I think then let's shift our attention to the supply thing of everything. So obviously the other conversation we need to have is where do we think the next wave of supply is going to come? Let me put it this way. I think the supply is going to come, but it's going to be very different by the city. And the reason why I'm saying is just remember to rewind the clock to about 3 years ago.
Yeah.
That's when the peak of COVID was happening. What was everybody doing?
Buying, and moving further away from the city because they can work remotely.
There we go. Exactly.
Also buying stock in Zoom.
And electric scooters.
Yes.
And e-bikes. Come on, free money. Yeah. But all jokes aside is that now the good times are obviously coming to an end depending on
how you want to see this. So reality kicks back in. And a lot of these people, obviously, they chose fixed term at that point because their mortgage was very, very, very low. We're talking about like 2%. Well, the thing is, their 3-year fixed term, if they elected to go 3-year fixed, it's about to come up. And as I said from the last podcast, a lot of these people are in for a rude awakening.
Yes.
Because like what you just said, is that a lot of these payments, monthly payments, is going to go up thousands of dollars. And these people would then need to make a conscious decision. Do I want to keep holding on to this? Because don't forget, that's the economic factor. The personal factor is COVID is past tense now. So a lot of people are actually moving back into the city. Right? And with them moving back in the city, that distance that they need to drive, it's now a huge disturbance to their lifestyle, right? So that's another thing that we also need to consider. So with that being said, I feel like if you are in an area where you're looking at the exterior parts of Greater Vancouver, so
Abbotsford, Langley,
Chilliwack,
Maple Ridge.
I feel like as kind of the year goes on, you're going to see a lot more listings there. However, on the flip side, if you're looking for city core, like, North Van, West Van, Richmond, Burnaby, Vancouver, I would say you might as well try to get yourself into the market now. Because I cannot foresee more people releasing their home in this area, because these were the areas that people were moving out.
Well, that's why we see 30 groups going to open houses in Burnaby. We're seeing 40 groups of people going to open houses in Fairview. That's exactly closer to the city center.
Exactly. So with that being said, that makes our next market update extremely interesting.
I know we say this all the time. I feel like, you and I are pretty optimistic people, but we're also realistic. And the market will tell us where the market is. It's not you and I deciding, it's the people who are deciding.
Right. And I think, to be honest, with the next couple of market update, it will be interesting if we have the data to see like how is the price growth or all of that stuff continues while we're kind of into March, April, May, and all that stuff, because I hope what I said is somewhat true, because basically I'm just taking the patterns and I'm just reversing it since COVID times.
Yes.
Yeah, basically. So with that being said, thank you so much. That will conclude our podcast for this week. You know what to do.
Well, my name is Jeff.
My name is Joe.
We're the Mike for Vancouver Real Estate. Please help us with our algorithm. Like, comment, subscribe, share this episode with someone that you feel like would benefit from this knowledge, and we will see you next time.
See ya.